Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 4th of August, 2011. We're coming to you today on a Thursday. There'll be no charts or video tomorrow. I'll be watching the markets, but regardless of whether we're down 500 tomorrow on the jobs number, we're up 500 or somewhere in between, nothing's going to change our posture right now in terms of the trend being down. We did call the trend down last Wednesday on the 27th. Again, the reason for that, we broke the 20-day, the 30-day, the 50-day, and we broke our first area of support at 1300. We were kind of looking for 1320 to hold. I believe that day we closed right through 1320 at 1304. So that was our signal to either get short or to go to cash, or a combination of the two. Back in the day, not too many, 3 years ago, when if you were with me, we talked about 1400 being a top because we broke an area of support and a trend line. And let's take a look at this. I did draw a trend line in before we started recording here. And there's a couple places you could put this, but we're off, we're within a 10-point range of the S&P, so it's going to work here. We did break this trend line that we've had in place that has held since the beginning of the March lows in 2009. That was broken. So the first thing we do, other than looking at a daily chart of moving averages and support, we look at a long-term trend line, and we broke below that, and then we also broke below initial support at 1300. And then on the way down, there was areas of support at 1294, 1250, and 1200. Now, this is not an I told you so video. This is a very humbling business. But I did say for the longest time, or I have said for the longest time, that I felt that at some point in 2011, even if we went to 1400, 1450 or higher, we were going to print 1200 on the S&P cash, the SPX. And the reason for that is just long-term support. What was once resistance back here, we broke through it, became support. And then we broke through it here in the 2008-2009 Lehman collapse. It became resistance again. We broke through it. Now it becomes support. I do believe that we're going to get a bounce here, but I really believe that the bears have the handle on everything at a minimum until we get above 1300. And that is just, again, what was once support, my gosh, less than a week ago, or around a week ago, is now a major area of resistance. So the overall trend, for the record, on the 4th of August 2011 is down. We have had no losers on an account value basis in the managed accounts this week. Even our position that we have in Apple, those losses today were wiped out by our long position in bonds. We did sell some Apple, 50% of our Apple, above 390 and change, and I'll be looking at it tomorrow where to sell the balance. We are net profit ahead, but I don't care to give back much more profit on this head and shoulders pattern. We did talk about a gap here on 722, open space on a chart, high probability that gets filled at some point. We'll see if we stop there. We also have a position in AGG in the managed accounts. I did move up a stop on that yesterday. I do anticipate a little bit of profit taking in bonds. And let's take a look at gold. I did sell some of our gold position today. And those individuals that want to hold a core position in gold, we did start to hedge today. The overall trend is long. But again, when money starts to come out of the market, it comes out of everything. Profitable positions and losing positions. I don't know that there's enough capitulation yet in the markets to call a bottom. I'm not interested in trying to call a bottom here. I'm going to wait till the dust settles, and then our next decision will be whether or not we play a bounce and go long with a percentage, or we look for an opportunity to short. So it stands right now, you guys, the overall trend in the equity markets is obviously short, and I'll let you know when that changes. Our subscribers are doing very well this week. Because they have the option of either being 100% in cash or 100% short using the SH, and we'll just take a quick daily chart view of that. The SH was up again today, and we have since moved our stop up above entry. Let me talk about the one mistake that I made for the week. we had a position on in the TZA, and then I'll end the video here. We had a position on in the TZA in the managed accounts. Not a big position by any stretch. But what I did do is anticipating a bounce in the market, not a trend change, but a bounce in the market. In other words, not a trend change from short to long, but a bounce as I moved up our stop on our TZA position, which is triple short the Russell. I moved it up so we could lock in a profit of basically 2.9%. As it turns out, in hindsight, that was a bad move. This position today was up 18%, just today. But it is what it is. We locked in a profit, but in the end, I wish I would have parked the stop a little bit farther back, and we'd be have a nice profit in that position today. But that's it, you guys. No losses in the managed accounts today. Subscribers are doing well. We have the overall trend is down. And we'll see you either on the radio show Saturday. We'll see you next week on the blog. Have a great weekend. This is Doug McKay on the 4th of August, 2011. Thanks.